Hello everyone, this is Greg here, and today I want to revisit Microsoft. And now, just like the previous videos, we'll be sharing with you some of the interesting position our system has picked up. And today we're using a stricter algorithm. I mainly want to go over the vertical spread positions and actually some of the strangle positions and also singles as well. So yeah, let's begin. So first of all, let's look at the chart here. We have experienced quite a big move in the last few days here. Very bullish move. In fact, you can see here we first had a big gap in July 30th, end of the month, and then we have another smaller gap here. And yeah, a very big bullish move. Now the biggest question is, what's going to happen next? Now, hopefully, by looking at some of the details and some of the positions here, let's see if some of the bigger players can tell us where the ticker is going to be heading next. Now, implied volatility has been quite high. It has been high for the last week or two, few weeks actually. And let's look at the some of the flow cards to see what's happening in the generic option market. Now, again, some of the sometimes in the aftermarket, some of these data might be delayed, so please just bear with me on that. So yeah, there's quite a big buildup of call positions in the last few days. That's very interesting, like right here. In July 30th, for example, we have a lot of people entering buying calls, and yeah, same here. And today we have a lot of sell-off of call positions. Now that could be people just closing their call positions that were built up early throughout the week, or it could be covered call positions. But looking at the open interest on some of these positions, yeah, it looks like there's still a lot of traders holding on to their call positions. Now, someday in a different video, I'll be going through some of the details of these flow cards and explaining what these numbers and color coding mean. Similar to the option chain positions, not all of the flows are displayed here. These are mainly flows that are more important, more unique flows that are picked up by our system, our algorithm. So just keep that in mind. But yeah, let's look at the let's continue to the option chains and look at some of the detailed positions. All right, let's review some of the positions that our algorithm has picked out today. Let's see here. We got big positions going in both directions. So let's take a look at them. Alright, so the first one here is actually bearish. Somebody's betting that the price will not go above 505 within about 3 weeks here. 2 to 3 weeks here. Let's look at the next one here. Actually, yeah, similar. So somebody is betting that after a serious bull run with two gaps, that the price will quiet down a little bit here, either stay at the current range for 87, 490 range and not go past 510, 505 in the next few weeks. Keep in mind that these are just a tip of the iceberg. This could be a part of a bigger strategy, a very small portion of somebody's portfolio. But just looking at the structure itself, the strategy is bearish. The two, actually three now that we have seen so far. Actually, that's yeah. It's not necessarily bearish, meaning that they're not really betting that the stock will go down, but they're betting that these big positions are betting that the stock will not go above, will not be as bullish as the last few days. In other words, that they're betting that it won't continue to rise so aggressively in the next week or so, next few weeks. So yeah, let's see. Yeah, that's earlier position. Yeah, so this one right here, this is a bullish position, a reasonable bullish position, very close to the spot price. Betting that in the next few weeks that the stock will continue to rise and will go past 490, go past 510. Yeah, that's a very reasonable bullish position. Let's take a look at. Yeah, this one is bullish as well. Betting it will go past 495. Yeah, potentially 520. So we're seeing mixed signals here. Let's look at the put side here. Actually, this is also a call spread. Betting, so buying 480, selling at 500. Huge position here. This one is also bullish. So yeah, today, because we're using a stricter algorithm, we're not seeing, it's not showing as many positions as we did last time. Yeah, it's certainly picking out some of the bigger, stronger positions. This is a bearish position right here, betting that the stock will go below 480 within the next few weeks. This one as well. Now keep in mind that these might be just hedging positions. Some of these, a lot of these big players have long positions in Microsoft, no doubt, and these could be just hedges. But yeah, generally looking at the spreads, things are definitely looking bullish. Let's continue. Today, instead of iron condors, let's look at strangles, because these are very interesting strategy. So essentially, these positions are betting that there will be a big. Oh wow. Okay. We'll come back to this one. This one is very interesting. So essentially, these positions are telling us that the trader, institutional or retail trader, is betting that there will be a big move in this particular ticker. But they're not sure which direction the stock is going to be heading. So that's why they're placing this type of trade, buying both put and calls. So essentially, they start to make money when the ticker goes above 505, for example, in this case, or below 470. But because the implied volatility on this ticker is relatively high at the moment, the stock would have to go quite far in order for them to make money from this position, because the premium that they're paying is quite high, and that's why somebody would place this strategy right here, which we'll come back to in a little bit. But yeah, so somebody's betting that there will be a big movement, either continue rising or closing the gap. This one's very similar, betting that the stock will go above 510 or below 480. But again, the stock would have to be making quite a big move for these positions to be making money, just because of the premium paid on these positions. Now let's go back to this first position here. This is interesting. It's not that huge of a position comparing to some of these positions, or the spread positions, but this is most likely, so these are essentially what you call naked positions. Essentially, you're selling a call position at 520, and you're selling a put position at 465. Now, most likely what's happening here is these are not, let me see here. Yeah, these are probably not margin accounts. There's probably a bigger long position that's further out, usually maybe a half a year or a year, 2 years, 3 years out, and so these are not really naked positions. They're just part of a bigger strategy out there, and essentially they're collecting premium on this stock, betting that the stock will not go above 520 or drop below 465. Essentially, they're betting that the stock has already made a big movement, that it's going to quiet down a little bit, and they're going to collect premium on this position right here. Yeah, on a ticker like Microsoft, most likely this trader here, institutional or retail, most likely institutional, most likely this trader here has a big long strangle position, a long position in the call and the put side. Most likely a bullish position, betting that Microsoft will be rising in the long term, maybe a year or two, and they use these short positions in the shorter time frame to collect premiums, to offset the premiums paid for the long position. Very common. I'll be doing another video later on explaining these type of strategy in more detail. But yeah, this is very interesting. All right, let's move on to single positions. These are, first position right here is, yeah, this is probably a covered call. Somebody has a big long position, and they're just selling a covered call to collect premium, essentially betting that the stock will not go above 520 in the next few weeks. They're not really bearish. Just this trader here just might be thinking that Microsoft has already rise quite a bit in the last few days, that it's going to cool down a little bit, so they decide to sell a covered call to collect some premium. But yeah, let's move on here. That's bullish position right here, huge position, betting that the stock will go past 500 in the next few weeks. This one as well. Yep, huge position, also bullish. Now that one, this is actually a put position. It's bearish, but could be a hedge. Well, actually, this one's probably not a hedge because of the price point it's set up at. This one is probably directional, betting that the stock will drop a lot or a little in the weeks to come. Probably thinking that the price has moved too much in the last few days. Yeah, let's move on to the next one here. This one is also bullish, and this one is bearish. Again, could be a hedge, but likely bearish. Okay, so this one is bullish. This one is somebody is selling put here, betting that this price will not drop below 465 here. Very common position if you're bullish on this. Let's say if you're bullish on this stock right here, but you're not sure on how aggressive the stock is going to move in the coming weeks, this could be a good position to use, good strategy to use, because as long as the stock goes up, you're going to make money from this trade. Or say that you simply like this ticker, you want to buy stocks, you want to buy Microsoft stocks, and you're not sure when to enter. This could also be a good strategy, even if the stock drops, no matter. Say if it really drops in closing the gap in the next few weeks, dropping below 465, you can execute this contract here and just end up buying Microsoft stocks. So this could be these are good safe strategies to use in bullish markets. This one is bearish. Actually, this one is likely a hedge for a long position. This one as well, most likely. Okay, yeah. So today, all of the strategies we have reviewed, it draws a picture here that a lot of the big players are betting that there's going to be a big movement in the weeks to come. Not sure in which direction, but there are also plenty of strategies out here indicating that they think the stock has risen too much in the last few days, that it's gonna cool down a little bit, even drop some in the next few weeks. But yeah, let's see what happens in the next few weeks. We'll be coming back to that. Thank you for watching our video today. Hope you find it interesting, and hope some of these positions can be helpful as a reference to structure your own strategy. But if you have any thoughts, any comments, please leave it in the comment section. Anything you want to see more in the future videos, please also leave it in the comment section. Thank you very much for watching.